Are options for everyone? We're here with Dan Pastorella, and he's going to tell us who options are for, so be careful. Dan, you know, there's so much talk about options these days, and I think a lot of times they're misunderstood by investors and traders alike. So tell us a little bit about who options are for and how people can start and where they should start depending on whether they're, say, a trader versus an investor.
Yeah, options are not necessarily for everyone, but there's a pretty good cross-section of the investing public who can use options. Conservative investors can do things like buy a put to protect their portfolio, or an individual stock for that matter, or they can generate income on a stock they already have that they think might not rise or fall too much. That generating income type strategy is called a covered call. And so that's what a conservative investor might consider in order to use options and use them pretty conservatively and responsibly.
You're looking there at almost with, say, for a covered call strategy with low volatility stocks, you know, sort of the risk on stocks that, or the risk off stocks where, you know, there's solid utilities, things of that nature that aren't really moving in this kind of market. And if they do move, generally it's more to, you know, slightly to the upside as people come in for safety's sake. But you're not really putting your life savings at risk or anything. And you're juicing up a little bit of the returns on some low yielding stocks.
Exactly, yes. And that's an excellent feature of options, is that you can do that. When you think stocks are not going to move a lot, there's a strategy for that, just like you described. When you're afraid that stocks might move a lot, there's a strategy for that, like buying the put to protect the stock. And then there's a whole host of other strategies for both conservative investors and more aggressive speculative traders.
Give me a speculative strategy.
Well, for example, a trader might simply buy a call. Instead of going out and buying a stock, a trader can buy a call as a stock substitute. Now, there are certain advantages and trade-offs for that matter with options. For example, when you buy a stock, if the market goes higher, you can profit. If the market goes lower, you lose, of course. But sometimes something happens in the market where the stock drops a lot. And maybe that's stock specific, where bad news comes out, bad earnings, or sometimes it's market news, you know, systematic risk. And when that happens, if you own a stock, you stand to lose potentially a lot. But if you buy a call, you have limited risk. So you can have similar upside potential, but you limit that downside potential because you're only investing a fraction of what you would have if you bought the stock itself.
Thank you.
Thank you.
And thank you for watching the MoneyShow.com video network.